Welcome back. You're watching The Money Show, and we are sorting out your financial portfolio and giving you the right advice. And the expert for that today I have with me is Nisreen Mamaji. Let's continue, Nisreen, and let's take Romit's question. He says that he's 44 years old and he wants to build a corpus of 5 CR in 12 years. He wants to understand, can this be done via mutual funds? And if yes, what should be the investment amount?
Sure. So you're 44 and you want to build a corpus of 5 crores in the next 12 years. So you would need an SIP of about 1,50,000 rupees at this point of time. And the funds that we would recommend are Motilal or Small Flexi Cap Fund for about 45,000 rupees, which is the Flexi Cap category. Bandhan Core Equity Fund, which is a large and mid category of about 35,000 rupees. Franklin India Smaller Companies Fund, also 35,000 rupees. And a sectoral fund like ICICI Pru Business Cycle Fund for 35,000 rupees. So we've tried to complete, a holistic picture and give you asset allocation for FlexiCap, a large and mid, a small, and a sectoral thematic as well. This portfolio is slightly aggressive, but since you are 44 years old and you've also given a time frame of 12 years in order to achieve this corpus, so therefore, please note that, if you feel that it is slightly more risky, we can always come back to you with a more, a moderate portfolio, which can include large cap funds and also balance advantage funds, which will have some amount of equity and some amount of bonds and some amount of derivatives like arbitrage. So if you are aggressive in your stance and you can withstand the volatility of the next 12 years, because in a 100% equity fund like this, the market will be up and down, but you need to be, empowered and also make sure that you don't stop the SIPs because you have a certain goal. If you can continue and not manage to get, stop your SIPs during this period, then this definitely you would be able to meet your goal at an assumed rate of 30% compounded annualized growth rate.
All right, so that's the answer for Romit. Let's take Ankur Pandya's question. Ankur, are you okay? I don't think we have Ankur on the phone line with us. This question is via email. Okay, so he says that he's got sizable investment in pure equity and equity mutual fund schemes also. He's seen a good phase of growth and appreciation in his investment in last 10 years. Currently, he is hesitant to invest in highly overpriced funds. So he's considering low risk option with a time horizon of 3 to 5 years. And he wants to know if for 3 to 5 years it's advisable to invest in balance advantage funds. They have equity taxation, as he's aware of, and safer than having a pure equity fund. And he wants to understand if this approach is right. Parking time is almost 3 to 5 years. So 2 to 3 schemes, would that be ideal? And what should be the return expectation for that investment time horizon and from a balanced advantage category?
Sure. So, I'll just let you know what a balance advantage fund is. It's basically has a very flexible portfolio. And this kind of a product will adjust what they invest in equity or direct stocks, depending on how the market is doing. So when the market is risky, then they invest less in equity in order to protect your downside. And when the market looks good, then they invest more by increasing your equity allocation. So this kind of, active management will help you to reduce the losses, because in this kind of a product, you're trying to protect the downside. So if you're looking for a safer option for the longer term, then definitely Balance Advantage Fund is a very good suggestion. And you could invest in ICICI Balance Advantage Fund, the HDFC Balance Advantage Fund. These are both equally good options. HDFC already has a higher percentage allocation towards equities. And so if you want to go a little safer, then you can go for the ICICI one. But the alternate view is that, in the coming years, the Indian economy is poised to do very well. There are factors such as urbanization, digitization, and the ongoing economic reforms. And the government's focus currently is on manufacturing, and which is, possibly going to boost the domestic manufacturing and also attract foreign investment. So if you take this into account, also the India's younger population, growing middle class, which has a very strong consumer base. All these factors will support the economic growth. So if you are looking to invest for 3 to 5 years and take a slightly higher risk, then you could be looking at also multi-cap funds or maybe flexi cap or a large and mid, in order to reduce the volatility, or even 100% large cap funds. So you can manage your risk profile even in that, 100% equity funds because you're investing for 3 to 5 years. And what you can do is, as a safe option, go the STP route, where you're systematically transferring your idle funds over a period of, say, 3 to 6 months or so. So that way you will get advantage of all the lows which are possibly expected in the near term because of our budgets, because of our elections, the US elections. Our budget is on 1st of July. So there are a couple of incidents and events which will be having an effect in the shorter term of 3 to 6 months on our markets. So if you enter the STP route and then stay invested for about 5 years, you can alternatively look at 100% equity funds as well.
All right, so very well explained, Nisreen. We don't have Ankur on the phone line, but then looks like he's got everything answered that he wanted to know. Well, on that note, it's time up on the show as well, Nisreen. Thank you so much for being on the show and helping our viewers with their financial portfolio queries. And time to wrap up, but I'm going to leave you with our WhatsApp number and email ID where you can send across your financial portfolio queries. Thank you so much for watching. Goodbye. All right, so today we are going to answer your mutual fund portfolio queries, and we get a lot of questions via email ID and WhatsApp number. So to answer all of these viewer queries, today I have with me Nisreen Mamaji, CFP, Moneyworks Financial Services. Nisreen, good evening and welcome to the show. So we have a lot of viewer queries, and we are also trying to get our viewers on the phone line as well. But then till we do that, let's take Deepak's question, and this question is via email. Nisreen, even you must be having the question. He says that he's a student in US and he wants to start investing in Indian markets through mutual funds, and he's slightly confused about what kind of strategy should he be adopting. Currently, he has 10,000 rupees per month via SIP that he's planning to put, and he also has 1 lakh lump sum investment option for him available. So he's confused whether he should be putting SIP is a different amount of investment that he's planning to go in for, but he also has 1 lakh which he wants to put through via an STP. And what should be the fund mix for him, what should be the exact proportion across market caps. The goal is actually to build a house for his family in next 5 years, and he also wants to save for his children's education, his retirement after 20 to 30 years. So a big congratulations to you, Deepak. We don't have you on the phone line, but you've thought about the different life stages and you're going ahead in your life that you will be coming across, and undoubtedly buying a house or making a house of your own is the first financial goal that everyone has. He's also gone ahead and thought about his retirement, which is very good considering he's a student right now. So great thumbs up to you, and great start, 10,000 rupees and a 1 lakh lump sum investment. So what should be the path for him, Nisreen?
Sure. So I would definitely echo Kavita's sentiments on congratulating Deepak for having started the thought process early and for really concentrating on where he wants to go 20 to 30 years later, which could be retirement and wealth creation. So as far as this query goes regarding the house purchase, so with 10,000 rupees, and if your term is about 5 years, that goal could be a little bit hard to achieve. So I would definitely recommend that you push the goal to 20, 30 years, which is your original wealth creation plan or your retirement plan. And for the house purchase, maybe defer it for a few years once you started earning and you have your corpus is a little higher. So currently you have 1 lakh rupees of lump sum as well as 10,000 rupees SIP is what I've understood. So you can do a 40-30-30 ratio. 40% could be invested in a large and mid cap fund, and I would recommend the ICICI Prudential Large and Mid Cap Fund. 30% into a sectoral or thematic fund, and we recommend HDFC Manufacturing Fund, and a small cap fund for the balance 30%, which is Nippon India Small Cap Fund. If we kind of forecast at a compounded annualized growth rate of 14%, you would have about 3 crores in your corpus after 25 years. So that's the amount that you would be expecting if you achieve a growth rate or return of investment of about 14 years. You should definitely review it every 3 years to make sure that you're on track and you are able to also factor in your home purchase goal maybe a little later down the line. So you can either extend your term for the home purchase or increase your SIP and lump sum figures. Having said that, congratulations again on taking on the responsibility of purchasing a home for your family.
Perfect. We don't have Deepak on the phone line, but the kind of recommendations you've given him, we just hope that he starts his investment. And if at all he needs more guidance from us, Deepak, you can send across your question once again. But then, Neeraj Nangia, I have him on the phone line with me. Neeraj, good evening. How are you doing today?
Absolutely fine, ma'am. Thanks for taking my query.
Thank you so much for sending across your question. And I must really appreciate what a detailed question. And this also gives our expert the convenience to do your financial planning in depth. So thank you so much for giving us all these details. I think I have most of it, but is there anything that you want to specifically highlight? It's a lot for me to read on air. It will just take away the
Yeah.
time, in which we want to do your financial planning. But anything specific you want to highlight? Because Nisreen has your question on her.
Yeah, ma'am. In summary, no, my goals are probably early retirement around 51 years of age, which is 9 years from now, and I have a corpus size of around 4 CR. And roughly from a mutual fund perspective, I invest 1.5 lakhs every month. Apart from the other investments which I do in employee provident fund and NPS and other things. So I just wanted to kind of do a third-party assessment from your expert that the path that I am on right now, that will lead to my financial goals achievement around 2031, which is 9 years from now.
Sure, sure. I will just read out your goals. So by 2032 or maximum by 2034, 9 crores is something that you want.
Yes.
Uh, uh, Daughter education 1 CR 2032, son's education 1 CR 2037, daughter's marriage 70 lakhs 2037, son's marriage 70 lakh 2042, and then extra requirement is of 4 lakh for vacation. One time miscellaneous expenses every year post retirement. What would be an approximate corpus figure for this?
2 lakhs, ma'am.
2 lakhs. Okay. Also,
Yes.
since we are talking about goals, which are more than 10 years, for example, daughter's marriage, son's marriage, do you think 70 lakhs would be an appropriate amount or a comfortable amount for their marriage?
Ma'am, yes, but then you never know with time. But 70 lakhs is something that I'm estimating
Sure.
right now. But I think probably 80, 90 lakhs also I could be able to absorb.
Yeah. Yeah. All right, but I'm also assuming that you will have your children invested properly by that time, and they would also get a hang of investments and prove to be great investors on their own. So even that will help from their end, because primary responsibility of parents is to get their education right, which I think you're really working on beautifully. Your retirement corpus is inflation adjusted that you want to accumulate?
Yes, ma'am.
Perfect, 9 crores. All right, so I think we have most of your information, and great to see that your insurance is also in place. Um, you wouldn't want to go to a individual health plan later on in life,
Ma'am,
because
I
you have a
already have an
family
individual
floater
health
right
plan.
now.
Yeah, so family floater, no. Ultimately, when the kids kind of attain 18 years, no, they'll kind of have their
Yeah,
separate
yeah.
policy.
Then
So
you
me
will
and
be
my wife
going.
can kind of, yeah,
Great.
yeah.
Great that you are aware of that. Okay, so let's begin your financial planning. Okay, Nisreen, now I think it's over to you.
Sure. So, Neeraj, I mean, I must congratulate you. Me and my team were really impressed that you have managed to, save quite a lot of, corpus, already about 3.9 crores. You're also expecting an inheritance around the age of 60. And your goal planning is to the T as far as your children are concerned and your own retirement. So definitely it's a beautiful case study and it's live. So I'm really very excited to meet you, and we were very happy while we were analyzing your entire data. It gave a very holistic picture, and if more investors thought like you, I think their journey would be definitely very smooth. So at this point, what we have done is we've created an entire cash flow right from 2024 up to the time that you will be in your 80s. And we have assumed your age to be 41. So you will be, retiring. You said you wish to retire in your mid-50s and in the next 10 to 12 years. You've taken on a sizable investment plan, including PPF, EPF, Sukanya, mutual funds, direct equity, and you also have a home which you have purchased for investment. So all your current investment, if we've taken the weighted average rate of return, is approximately 13%. So that's the rate at which your entire portfolio is growing, including all the various asset classes, which includes debt, equity, and as well as property. So the weighted average return would be around 13%. On the basis of that, with the lump sum that you have, 3.9 crores, and the SIPs that you're currently putting in, you will be able to match all your goals. So your first goal will appear in 2032, which is your daughter's education. We have adjusted this for inflation. So currently you have planned for her 1 crore, but basically what you will need is about 1.3 crores in future. And later on, you have in the year 2037, you're planning your daughter's marriage as well as your son's education. So that combined is about 3.2 crores. Again, that is the future value, because today you have, probably said that 70 lakhs would be your marriage expenses and 1 crore is your education expenses per child. But if you, kind of inflate it for at about 5% inflation rate, you will need 3.2 crores. Also, you will have retired by then. So what happens is that we have calculated your monthly expenses currently at about 1.5. The value of that in the future, about 12 years later, is that you would need for the entire year would be 32.5 lakhs per year after retirement. That again, we have inflated it per year for your retirement to your, monthly returns that you expect from your corpus. So rather than giving you a 9 crore corpus for retirement, we have factored in all the inflows and all the outflows. Okay, because there is that one pot that you have, which is your investment pot. From that, you have current investments, present value 3.9 crores. You're putting in an SIP. By the age of 60, you're expecting an inheritance of about 4 to 5 crores, you mentioned, and you have all your outflows where you mentioned your days. So as per your day schedule, you will be able to manage all the inflation adjusted expenses, including your monthly expenses of travel that you mentioned, 4 lakhs of travel and maybe 2 lakhs of miscellaneous expenses. After factoring all that, at the age of 85, you will have a corpus of about 50 crores. So this is what you can expect at the end of the retirement phase. And after having spent, a wonderful life, managing all your expenses, your retirement planning, your travel plans, your miscellaneous expenses, and all the detailed planning that you've given for your children. But again, I would like to tell you that this is, we have also factored in all the inflation for all your goals. So it's not only 1 crore or 70 lakhs that you mentioned, but in the appropriate years, your expenses will be much higher, as well as your monthly expenses, which has been targeted. You'll start with 32.5 lakhs at an inflation of 5%. And you will, every year, your expenses will increase by 5%. So we've also factored in inflation for your retirement period. So this is what I would like to tell you. Your portfolio seems to be quite all right. You don't need to change it, and you can keep it as it is. You can, sort of reduce it a little bit and keep a couple of, little more diversification. You have too many small cap funds, so you can reduce each of these and keep a slightly tight, portfolio. One in a small cap, one in blue chip, one in large and mid, and so on and so forth. So don't have too many funds. You will just have duplication of stocks.
All right. Quickly, let's just go back to Neeraj and ask if he has more questions for Nisreen. Neeraj?
No, many thanks. I think thanks to ma'am and you. As in, so I've kind of understood that some of these expenses need to be inflation adjusted.
Sure, exactly.
And no major changes to the portfolio is what I could hear. So I'll kind of continue that and try to reduce the number
You just need to avoid duplication of your mid cap and small cap allocation. So that is also what Nisreen highlighted out. But just in case you missed out, sure, yeah.
One last question which I have is, and for all early retirees, aspiration people is, what is the best withdrawal strategy? In the sense that SWP from mutual funds, is it the best strategy from a taxation perspective also?
Sure. Quickly, Nisreen, what is your answer?
I'm sorry, I didn't get the query. What is the best?
SWP strategy from tax perspective for all those people who want to retire early.
Okay, so basically, I mean, from the tax planning point of view, your withdrawal up to 100,000 rupees of your capital gains would be tax free. But that aside, you would be, you would have to pay tax at the rate of 10% for long term capital gains if it's a 100% equity fund. And that is the tax structure as of today. When you retire, there might be some changes. But as of today, you would be paying 10% on capital gains on your withdrawals. And up to 100,000 would be tax free.
All right, Neeraj, thank you so much for sending across your question. And just in case if you've missed out anything, you can go on our channel's YouTube and there is a whole timeline or playlist of the Money Show where you can watch the show also and the recommendation for you. Time for a quick break, but then post that we have Jashi Kohli on the phone line with us and then we'll take up his question on the show up ahead.